Hello everyone, we hope you're all well and managing to stay safe. Thanks for joining us at this first GTR summary webinar. We're looking at the African market in light of the recently postponed GTR Africa event in Cape Town. We're still hoping to be able to convene for this event later in the year, for what will sure be a very different type of event. My name's Jeff Ando, I'm Head of Content at GTR, and for the next hour I'll be joined by an accomplished lineup of speakers that make the time absolutely fly by as we consider the landscape for African trade in the new normal. Please do use the Q&A function on your webinar screen to submit questions. We'll go through these at the end, bringing speakers back in to address where relevant. I'm first joined by Dr. Robert Besling, Director of Africa and a firm friend to GTR, as we journey through the impact of COVID-19 on all areas of the market. Robert, perhaps you could kick us off with some initial thoughts as to where you think we are at present.
Hi, Jeff. Hello, everyone. First of all, thank you very much for GTR for hosting this virtual event in replacement for the Cape Town event earlier this year. And I'd like to welcome all the panelists who are joining us today here as well. Now, I've put a few slides together for this, again, to give a bit of an overview of exactly where we are at the moment. Now, if you look at the first slide there, and I'm going to move them behind me as well, is the curve that we are seeing at the moment, or at least the infection hubs that we're seeing at the moment. These are very much focused on two areas in Africa. One in the north, in North Africa, focused on Egypt, Algeria, Morocco, and Tunisia, as well as very much down in the south, in South Africa. These are obviously the two hubs where most testing capability is most present, and also where much testing is being ramped up at the moment. So this is almost a reality that because of the increased testing, there will be a more increased infections numbers here. There's a potential that a third infections hub is emerging in West Central Africa around the Gulf of Guinea. But for now, at least, it looks like Africa does not yet have a trajectory moving towards real epidemic epicenters. So there is a bit of a question here about where Africa will go in terms of coronavirus infections. Now, if you look at the next slide, you can see Africa's curve is quite different to what we've seen in China or in the US or in Europe over the past few months. It's actually far less steep, particularly when you look at infections per day. Since many of the lockdown measures were imposed last month, we can see infections and deaths per day actually dropping off. This leads us to a question. Does this mean that all the lockdowns measures are working and that Africa will be spared this third wave of infections? Or are we still expecting a big third wave to hit us later in the year? The South African government at the moment, with the largest number of infections, expects the peak to hit in September with at least 1.5 million infections just in Johannesburg alone. That's a worst case scenario, but this does seem what the health practitioners around the government in South Africa are working on at the moment. Now, if you look at the next slide, it's the impact of the lockdowns. It is the impact of the travel and trade disruptions around the African continent that are causing key concerns. About 2/3 of African countries have completely locked down, and about 15 African countries have partial lockdown or curfew measures in place. Now, the World Bank, which is due to meet with the IMF later this week, has forecast that Africa will enter its first recession in 25 years. This is mostly due to four factors. One, a disruption of trade and value chains, mostly because of a potential of China's disruption to supply chains in China. Secondly, a disruption of financing flows and remittances. A particular fear here would be that much investment committed or pledged to infrastructure projects will drop out. Thirdly, and perhaps most seriously, is the risk of a lengthy public health emergency, where many of the forecasts we're looking at the moment are in fact incorrect, and Africa will dip in and out of a public health emergency for the next 18 months or so. And fourthly, there is still a concern about the implementation of curfews and lockdowns across the African continent. To what extent is the coercive measures and the police abuse and the disruption of elective process and democracy in Africa going to impact economic growth and stability on the continent. Next slide. At Africa, we are constantly forecasting the political, security, and economic risk outlook for the African continent. And we have just a few weeks ago changed almost all risk ratings for African countries, where now about 31% of African countries fall into the severe category, and about 42% of African countries fall in the high category. So that's about 3/4 of all African countries falling above our usual elevated average. We hope and expect this to be temporary, at least for the next 3 to 6 months, and hopefully then fall back into our normal risk rating averages. But for now, at least, we do seem to have a real emergency in many African countries. If you look at the next slide, how are we going to forecast where countries are going? Again, we have developed here at Africa a COVID-19 country risk vulnerability model. Now, this is not a public healthcare model. It is a model that looks at political, security, and economic risk in the one-year outlook and how the broader impact of COVID-19 and the economic impact will cause a destabilizing factor to country risk. And based on our model at the moment, we can see that especially oil producers like Equatorial Guinea, Nigeria, and Angola are very much on the higher end of the spectrum here, as well as a number of other countries which are already at a more destabilized level, like, for example, Somalia, Sudan, Burundi, and even Swaziland, where the king might currently be in hospital. So again, we will be monitoring a number of different variables over the next few weeks and months that will build into this model, including some of the key findings that the IMF and the World Bank will come out with this week. Next slide, please. Because it is really now, with Europe and the US focused on their own emergencies, it is up to the multilaterals right now to try and rescue Africa. And that's not just the IMF and the World Bank, but it also includes Africa's multilaterals, which have already come out with a variety of very innovative financing solutions. In terms of the IMF, they are due to increase or double their emergency financial assistance to the African continent. There is a growing movement at the moment to try and increase IMF assistance to developing countries to up to $1 trillion. And these are all things which will be discussed over the next few weeks and months. In the meantime, it has been the World Bank and the IMF leading some of the immediate financing assistance packages. However, a number of African countries are refusing still now to restructure their economies to secure these type of economic packages. For example, Nigeria, which is looking at about $7 billion of IMF, AFDB, and World Bank financing, and even South Africa, which is looking at around $3 billion of potential financing. Their finance ministers have all very staunchly come out repeatedly and refused to accept any economic restructuring. So if you look at our final slide here, before I introduce the rest of the panel, is that at Africa, we are providing open access to all our COVID-19 content. So all the infographics, the slides, and the model that I've just showed you will remain available for you to watch there. Now, thank you very much already for your initial attention. And at this stage, I'd like to bring in one of our first speakers on the panels today. And this is Mr. Meme Onyebuchi, Head of Trade of South Africa and Southern Africa at Standard Chartered Bank. Meme, hello. I have a couple of questions for you, which will frame the rest of the conversation, I think, quite well before we head off into the other panels. First of all, Meme, I mentioned earlier this fear about a potential third wave of coronavirus infections moving from China to the Europe/US, and then potentially later this year, infecting at a real third wave effect much of the African continent. From your perspective, what do you think about all this?
Thank you, Robert. Many people will argue that that third wave is already here. I'm certain you are talking about scale, but if we are not doing testing from a scientific point of view, you don't have an idea of the number of people who are infected. We have already seen that there's community spread in some of the countries that you already mentioned about. And even in the UK, I recall that the Prime Minister at one point was downplaying it. But the moment they increased testing, they started seeing the number of people with coronavirus cases accelerating, escalating. So unless we have the test, we cannot determine. But from the numbers we have, it's a matter of concern, and we have to tread carefully.
Thank you, Meme. I do agree that the testing capability will have to be ramped up before we get any type of idea of what's going on in many parts of Africa. So, but based on what we're seeing at the moment, particularly from an economic and a trade perspective, which African markets, or in fact regions, do you think will be most affected in terms of reduced trade flows over the rest of this year?
Look at what happened. We started talking about the disruption to the supply chain when it hit China, and then it went to Europe, and the next thing we saw was the implosion in the capital market, creating cash flow constraints for companies. Now, another thing that we leave out is during this period, Saudi Arabia began this price war on oil. So when you look at the first two markets that will be significantly affected, Nigeria and Angola, it's very clear because they have this triple whammy, not just one, not just two. And then we have South Africa as well, because now we've been downgraded as well here in South Africa during this period. Many people will argue that the whole world has been downgraded by the virus. But of course, the psychological impact of the rating, Fitch and Moody's rating on South Africa is going to affect it as well. And then the third country, and the fourth country you have to look at is Kenya. Kenya's exposure to China alone, 5 billion in bilateral trade. And of course, one of the key countries in Sub-Saharan Africa. These are the countries that I feel from an economic point of view will be most impacted, but there will be others. It's going to affect the rest of Africa.
I agree, it will affect most of Africa. And yeah, it is definitely those big commodity exporting countries. Oil and gas, first of all, Nigeria, Angola at the forefront, Algeria, Equatorial Guinea, but also those metal miners, South Africa, Zambia, Zimbabwe, DRC. So the World Bank at the moment projected $270 billion in lost trade flows for this year alone. So these are quite disturbing numbers. But maybe out of all of this sad news, do you see any opportunities for trade finance in Africa? Any light at the end of the tunnel here, or anything we can learn?
Very difficult, but I tell you, before this pandemic and the associated problems, we have been trying to drive digitization of trade in Africa as a means of leapfrogging and seeing how we can connect more with each other, as well as the, of course, you heard about the free trade agreement in Africa as well. But in terms of digitization, it became very apparent when we were all forced to work from home that connections, we needed to have more digital connection with our clients. And when you look at something like documentary trade, even if you digitize it within your own institution, the macro environment is very important because we have to present physical documents to clear goods at the ports and things like that. So I think this is an opportunity for reset for the regulators and governments to realize that it's important that they buy into digitization. And I think that this will make them relook at this with much more seriousness. So one of the areas I'm looking at that this will, rather one of the upsides is that we'll have a stronger conversation around it. We'll have better investment around digitizing, and this will create efficiency across the continent. And even the discussion around the Africa Free Trade Agreement, it will give it great impetus. I'm looking at that as the upside. Besides that, it's very difficult to talk about upside given the circumstances. The environment is very uncertain. We expect between 20 to 40% or even 50% decline in trade in Africa. That's a projection from industry bodies. Very difficult beyond this, but digitization is something that is a light in the tunnel. And I guess some of the panelists later are going to discuss about this.
Absolutely. In fact, we will be coursing back to the themes of value chains, free trade, and digitization at a later stage. Meme, thank you very much for your comments here originally. And I'd like to hand over back to Jeff Ando from GTR at this stage.
Many thanks to Robert and to Mema for their inputs here. I see we've got over 250 people already online with us, which is great to see. This next topic area is a hugely important one for all in the current climate. The agriculture and food sectors. To take us through this, I'm delighted to introduce Zaan Meyer, Head of Agricultural Commodities at Nedbank. Zaan, over to you.
Jeff, thanks very much. Uncertain times indeed. I would like to introduce the two panelists that's going to join me on this conversation, and I'm honored to have first Antonella de Cunhas, who's Group Risk Manager for Capespan. And those of you who don't know Capespan, it's possibly one of the biggest fruit exporters out of the region. They export into about 60 countries globally and 75 years of experience. Although I doubted that COVID-19 is part of that experience at this point in time. So as I said, interesting times indeed. And then Louw van Reenen, who is CEO of the Beefmaster Group. Beefmaster is based in the Northern Cape, and they integrated into feedlotting as well as abattoirs and then wholesale and retailing of red meat products. Also is quite significant exporter of red meat into the region, as well as north into Asia and the Middle East. So I think just for those who's listening and are not under complete lockdown like we are here in South Africa, basically what that means for us is that everything but essential services is basically locked down, and you stay at home unless you need to go and buy food or you need to go out and for medical reasons. So I think important is to understand that unlike mining and most of the manufacturing construction sectors, agriculture and food supply related operations are still operating as usual. So farming, veterinary services, phytosanitary, pest control, chemical, fertilizer suppliers, these guys are all free to operate in most of the countries in the sub-region. So whether it's localized or nationalized recommendations, or whether it's lockdown, whether it's localized like Ivory Coast and Ghana, or national lockdowns such as us here in South Africa, Mauritius, Angola, Zimbabwe, as Robert rightly said, I think most of the countries in Africa are now under some sort of lockdown. And I think more importantly, it's not only agriculture, it's also the services around that. It's the supply chain for both imports and exports. So it means warehousing. For us as banks, critical for us is collateral managers, because we use that to collateralize our securities in most of the African countries. They're still operating as warehousing operators. Transports, logistics, and then obviously crucial for exporting countries, Robert, as you rightly mentioned, is the ports, the road and rail networks. So by the look of it, it all sounds very well. It all sounds business as usual. But I think the question that I want to ask the two panelists that's here is it business as usual? Antonella, and maybe we should start with you guys, because citrus is a wide-ranging industry. It's one of the biggest employers in South Africa in terms of export. And unfortunately, in this perfect storm, citrus is experiencing its best harvest ever in South Africa. We're estimating 143 million carton export to the value in excess of 20 billion rand. So explain to me, what challenges are you guys facing in terms of the season starting now? And as I said, it's looking like an absolutely brilliant season. But you need people to pick the fruit. You need people to pack them in the pack houses. You need people to get the fruit out of the country. Where are you guys in terms of this? And how do you see and plan to actually mitigate this risk?
Zaan, good morning, and good morning to all our national and international participants. It's an absolute pleasure to check in with you guys. And yes, I would dare to say it's business as usual. It's a rare opportunity within the chaos. We're very fortunate we're not in mining, and very fortunate, I think, that from an executive management point of view, we took the decision more than a month ago when COVID became more and more apparent in our markets that we needed to do something, and working from home became the normal thing before we went under lockdown. In terms of this rare opportunity, when I say it's a rare opportunity, it's everything that we've been doing before. However, you have a lot of detours, a lot of tunnels that you've got to work yourself through, a lot of diversions that you've got to work yourself through, and you're continuously adjusting. For example, a lot of people said, oh my goodness, you can't, how can you carry on with business as usual when the hygiene practices have been so upgraded? Actually, they're not. As a fruit food export company, you would need to comply to Eurogap, to Global Gap, to HACCP, to those standards. So all you do is you lift at your benchmark to make sure that the infection, contamination, etc., is avoided altogether. So that has brought a lot of best practices into the pack houses, into the orchards, into the supply chain. Naturally, there are some challenges that the business was faced with that we did not expect. The lockdown did bring in a caveat in terms of labor, availability of labor. So lockdown meant a lot of people thought, wow, great, I'm now allowed to go home, forgetting that essential services, fruit is part of the game, and you will still be able to pick the fruit. So you had to bring back labor, transport them back in, go and talk to them, make sure, go through all the training to ensure that they understand. So for example, at Nova, our pack house in Paarl, we've introduced new standards, higher standards. They were already there. You had to wear a mask in the pack house. Now that mask is replaced 3 times a day. Now we're taking temperatures daily. So before a staff member enters, your temperature's checked. So those are the kinds of enhancements that have brought in different changes. The public holidays, the Easter holidays, the climate, climate has played in our hands, given us some time, because the citrus is not as bright and color ready for the market. So that has enabled us to say, okay, let's just reset and make sure that everything's right. We'll talk more about the cold chain issues later, perhaps. But as an introduction, yes, it's a brilliant year, and yes, it's the fruit is there. We just have to make sure that we get it to the market. It's not a widget that you can store away. We have used a lot of storage programs to look at later, and we were talking about Africa particularly and the market. We've taken a lot of the small fruits and put it into controlled atmosphere, which means we, just for those that don't know the industry, the apple that you eat in November, December, January, February was picked the prior year in March. It goes into a chamber where the oxygen levels are reduced. It then comes out, it goes through resorting, checking, calibrating, etc., packed, and off it goes, and it then arrives at your local Pick and Pay or your local buyer in Nigeria or Cameroon or Kenya, wherever it may be. So we've changed some of our strategies to say, okay, the market's closed in Nigeria, let's go in and put this into storage, into CA storage immediately.
So Antonella, you spoke about the cold chain, and I want to get onto that first, because it's not only about the massive amount of fruit that's going to hit the market at the moment. It's also about the port inefficiencies, because obviously the crucial part of this is to get the fruit to destination markets as quickly as possible. So, so where we are at the moment is the ports are not operating efficiently. There's
precisely.
And I think, what was concern for me is with a massive amount of fruit coming off the orchards, and we know that refrigeration capacity in South Africa is at its absolute limit. But how do you plan for that? Because I've heard horror stories, and I've seen pictures of Spanish oranges rotting on the trees because there's just no way to cool them down or to get them exported. Is this something that you've experienced here, or is there a contingency plan that can work?
Yes, we have a contingency plan, and I think the whole the alliances in the industry and the shipping with government, etc., are working very well to look at what other opportunities there are. So you will know that 20 years ago, more or less, the industry moved from conventional vessels, which would take 5,000 pallets of fruit out into a destination or a market, to containerized, which was basically 2,100, 3,000 cartons of product that would go to a designated customer. We've moved back to conventional. So the first conventional vessel is loading this week. I think she takes 3,000 or 4,000 pallets. The whole industry is picking, packing, and ready to load on the vessel. Remember that with citrus, the cold chain and the cooling of the product for certain markets, excluding America, Korea, Japan, China, where it's a steri market, can happen on board the vessel. So you can literally pick the fruit, pack the fruit, send it down to the port. It can be checked for export, and it then goes into cooling on the vessel. So the first conventional vessel loading this week. Next week we have another one. First one going UK, Europe, Russia. Second one going Europe, Russia. And then there's one coming in for the East, hopefully. So that's the big contingency plan that we've made, because the equipment availability, because of the global swing, has meant that we don't have the containers. The congestion in the port with general cargo means that we can't get access like we would like to. And as you say, cold chain is a problem, but fortunately not for citrus. Perm, we've got our designated warehouses, and they are there to support us.
Lo, thank you, Antonella. Lo, I want to come to you. This is a whole different kettle of fish. This is the red meat industry, and you guys are pretty much as most of the other feedlots in South Africa, or the larger ones, in fact, are regional players. You source cattle from Botswana, from Namibia. You bring them into South Africa. You then process those animals. You guys are big exporters. In fact, those of you who don't know, South Africa is a net exporter of chilled and frozen red meat. We export approximately 3 billion rands of red meat a year. And I want you to talk about the challenges that you guys have been facing. Was it business as usual, or did you have to make some innovations to make sure that your product get out there?
Thank you again to the other participants and for the opportunities on. Yes, our business, we've made some changes, quite considerable changes on the external side outside the business, although the business has always been prone to viral diseases. So we've got all the measurements in place, and every single thing that is now done to fight COVID-19, we've been doing in the business for a very long time already. So we didn't have any problems with our staff really. We had over 90% attendance from day one, before the lockdown even, and we're still now standing at 97% on an everyday basis. So it's really not it's not a major change for the business, but we had to adjust to be able to retain revenue, and we constantly have to change markets. And for instance, in the beginning, we had huge challenges because we were sold out within days because of panic buying. And then a week after that, it changed completely away from the food service QSRs back to retail. And then again, after that, it swung after Easter. Now it's totally gone back to exports. So we had to adjust quite considerably.
And then I think
luckily, we had a lot of interaction through our institutional or industry bodies, and that helped a lot. You know, that gave us a lot of headway to be able to make the changes.
So Lo, you spoke about the markets, and I think that's important to just understand. So you spoke about panic buying, and then you spoke about the cuts that needs to be shifted. Naturally, the likes of the fast food chains are not operating at the moment, which is a market for you. So that's obviously a gap that needs to be filled. With the outbreak of COVID in Wuhan, what was the impact on your business? Did orders slow down? Did you physically see that ships, vessels are not going there anymore? And is it true that China is mostly back to business as usual in terms of buying and importing our products?
Yeah, China is back to business unusual because they're actually buying more from us since some of the other countries can't export there. And we're struggling to get containers. We are really struggling to get plug-in ports into Shanghai and some other ports. But we are really having a major difficulty to get the vessels on time to be able to load the containers. And for us, that is a challenge because we've got shelf life on the product. That's mandatory in those countries under law. So say, for instance, chilled product will have a 3-month shelf life going into Jordan or into Dubai. And into China, we've got frozen product at a year's shelf life. So we need to be able to get the container there in time for the product to be exchanged on a consumer level. So that's the major problem for us, was to have containers. But on the sales, we've done exceptionally well.
That's brilliant. Antonella, I'm coming to you and I'm going to ask you an interesting question. And this is more of something that might just be a rumor. But as I likely said, we sit on 143 million carton market in South Africa. Have you seen the demand for citrus globally increase as a result of the vitamin C content? We hear about the exorbitant prices being paid for lemons at the moment, for instance. And would you link that with healthy eating? Would you link that with building up immune systems globally?
Yes, definitely. I think there is an enormous demand that is a wonderful business opportunity, bearing in mind that not only is there a volume demand, we also have a high return demand, as you indicated, in price of lemons. They were quoting $50, $60 a carton in the Middle East last week, where we know that the price of 15 to 20 is reasonable and generous. So it's a pricing difference. And then, of course, the exchange rate. As a South African company, it's going to make a very nice difference to your bottom line, both for the grower as well as the exporter and the whole supply chain where they benefit. Citrus, yes, for a long time, grapefruit, for example, has been very designated in certain markets. It's Japan that eats the grapefruit. Now everybody's saying anything that looks like an orange or a lemon, even a grapefruit, I'll take it. So we have a very big demand for it, for all the different varieties under the citrus component. Yeah.
I want to shift, Antonella, thanks for that. I want to switch tack a bit and talk about government and the policy makers in this time. And there's been a lot of praise. There's been a lot of criticism about government and what they have done and what they should have done and what should still be done in terms of allowing free trade in the sub-region. And I know, Lo, you sit on a lot of these planning committees, you attend a lot of these meetings with government and ministers in your capacity as chairing up some of these related associations. What is your view if you had to have a view in terms of working with government in this difficult time? And not only maybe government, also, you know, at AgBiz and Agri-SA and the South African Feedlot Association, the Red Meat Producers Organization. Is it the general feel that people has come to work together now as one to try and make the best of the situation? What is your take on it?
Yes, I think, Zahn, what we saw in government, what really came from the top is that there was an establishment of on the presidential level of the National Command Council, and that basically replaced Parliament. So the decisions were made quickly, and they were severe and fast. So we really actually could get a lot of actions down to the ground quite quickly. And so we did have a little bit of a challenge with the regulations were drawn up in a matter of hours. So that really put up a lot of different interpretations of what the regulations mean. So that was a challenge, and it's kind of like they had to fix the plane while it's flying. So that's really still one of those things that we have to work with government with. But I think generally they've done exceptionally well.
Andrea, from your perspective, I mean, citrus is a crucial element of foreign currency earning in South Africa. We are the second largest exporter of citrus globally. Has government played ball?
Definitely. I think we must actually applaud Cyril Ramaphosa to start off with in his organized methodology that he followed when he put us under lockdown. He made sure that all the government departments were ready to work with us. And then from an industry perspective, I've definitely seen a very cohesive joint approach to the container challenge, to the conventional vessel challenge, to market lockdown. You know, when India closed down, we wouldn't have been the only one on a vessel. How do we divert that vessel back to South Africa or to another market? So there's been a very cohesive approach from a government point of view, from an industry point of view. And I agree a lot with Lo, where he says it is fixing the plane while it's flying. The future is in motion. We are continuously finding ourselves, let's check this, let's change that. Documentation, for example, trying to get copy documents into Bangladesh. has been a very interesting time because, you know, so no one in my experience would ever accept copy documents. DHL couldn't get it for you there. So you had to go through governments and through banks and through different bodies to say, this is the only solution. What do you need? And the shipping line was your first block, you know. What do you need to release this? Do you need guarantees? Do you need other things? So yeah, government and all role players, stakeholders, the cohesion in driving the sail and floating the boat in its literal term was unbelievable, and is still.
Yeah, Antonella, Lo, thanks so much. I think we're running out of time. Just a little anecdote, and I heard this morning, and it's exactly aligned to what you were saying about Lo fixing the plane while it's flying, is in the wine industry. After a whole lot of lobbying, they allowed now export of wine to our markets in the UK because we were losing shelf space. But they forgot the fact that you need to bottle those wines. So the exporters couldn't get hold of bottles to bottle the wine. The printing industry to print the labels, for instance, are prohibited from operating. So it's those small little things that I think needs to be tweaked to make sure this is going to work into the future. But Antonella, while you're on the line, just a quick sentence. I mean, where do you see the citrus industry in a month from now, and maybe in 2 months from now? Is it going to be business as usual still? And whilst we're doing all we can, is that enough?
In a quick sentence, I think we've learned that digitization is a huge enabler, not only to handle the supply chain, but also to look at the future for you. In a quick sentence, I think it's a very bad scenario that has given the competitive advantage to those companies that have managed with bold leadership, sound relationships to work through COVID and to actually get better at what they do.
Antonella, thanks so much. Lo, you guys have been pretty much taking the bull by the horns in the industry, pardon the pun. Just in terms of your views, where you guys headed and where you're positioning yourself going forward for the future?
Well, we certainly scenarioing the worst. We're going for the depression. So we're looking at different scenario where we're going to get enough cattle from, or enough beef, or food for that matter. You know, it's going to be a real challenge. I think this is typically 1918 and 1930 odd times where we can only look at that. So it's a real challenge. But Zon, just one question came in from Garcia and about I think about the reefers. So the problem is still with vessels. We don't have enough vessels coming into the ports, and it's mainly driven with the ports that we're running at 30% capacity. So that's what government has to fix for us.
Thank you. Gentlemen, lady, thank you so much for this session. I think it was interesting. It was just good to hear about the challenges, but also better to hear about the fact that we can overcome these things. Jeff, over to you.
Thanks to Zaan, Antonella and Lou for their perspectives on this fascinating and crucial issue. We've had a few people submit questions so far. Please do keep them coming in. Bit of housekeeping. There's a Q&A function you should all see at the bottom of your screen. Please use this rather than the chat function. I know it's a little bit confusing. There's various options, but the best way to engage with our speakers is to use the Q&A to submit your questions. Robert and I are keeping track of those, and we'll be addressing those at the end, going through the best ones. We do have an hour allocated, but I guess in order to get through these questions and to make sure we can make the most of everyone's time, we can go on a little bit longer if people have appetite. This next section of today's webinar looks at the impact of COVID-19 on the export credit market. So leading on this, we have Gabby Buck, who's Managing Director of GKB Ventures and known to many of you, I'm sure. Gabby, the virtual floor is yours.
Thank you, Jeff. Sam, we've got 3 slides. I was wondering if you could get the first slide up. So this slide really is a quote, and I like this quote in that it sums up in one sentence a perspective of someone who's been in the business at a strategic level for decades, and he's been through various economic cycles. This is a chap, David Buck, who's an associate of ours, who has worked in 65 countries, and in this sentence, I think he sums it up by saying, this is bad, and let's not kid ourselves. And I have to admit, he came up with this about a week ago, and that's before yesterday, the Office of Budget Responsibility here in the UK came out with figures where they expect that our GDP, and that's from a UK perspective, may fall as much as 35% in the next year. And that is the biggest fall we would have ever seen in our GDP since records began. Next slide, I think demonstrates what I think is a perfect storm for the banks and for the export credit agencies. And the problem with this storm is that we don't, for the moment, have any end in sight as to when it will finish. We've had $42 billion of outflow from the emerging markets since the beginning of this crisis. From a bank perspective, they are not onboarding new clients at this present time. Existing clients are drawing down on their revolving credit facilities and taking cash where they can. Banks are struggling to manage this excess demand. Funding in the wholesale markets are going up. This is similar from a banking perspective to the 2009 financial crisis, but it's worse. Then that was liquidity. This is liquidity, but more fundamentally about credit risk. From an export credit agency perspective, they're going to be hit in their key sectors, potentially going to be facing with a sovereign debt crisis for much of their overseas borrowers. We've already heard Robert talk about the IMF and the World Bank allocating $1 trillion in terms of support. This is going to follow on in terms of needing of concessional financing for those countries that are entering into an IMF program. And the demand side, I think, is going to be weaker right across the board. The next slide is really where I want to focus the rest of my 3 or 4 minutes. And here I'm saying that this is a global problem and needs global coordination and a global solution. The ECAs, under the guise of the OECD, need to agree to common changes to the general terms. We need global solidarity, not national isolation. And I believe that the ECAs need to collaborate on a number of things. First, they need to avoid the defaults on their existing portfolios. And that's going to mean financial covenant relief, deferred tranches, debt holidays, liquidity lines. Second is that they're going to need to encourage domestic exporters and those who survive in the next 3 or 4 months to keep calm and to carry on. And that's going to require bonding lines, it's going to require working capital facilities, extra insurance. Now, those 2 things, I believe the ECAs are already doing, and they're doing that on a domestic level and on a portfolio basis. But the third, and what I think is the most important area that the ECAs need to collaborate on, is the need to encourage the buyers to continue to undertake new large CapEx programs. And for that, I think the buyers are going to need 100% financing. In that today, banks are not willing to do the 15% because of the mark-to-market volatility. And I think the ECAs need to step up and go from 85 to 100% of contract value. I think there's going to be a need to greater access to direct lending. And one of the unintended positive consequences of COVID-19 is the super low OECD SIR rates. I think also there's going to be need for longer repayments or longer grace periods. I've said already concessional finance, but all of this needs to be on a temporary basis to ease the pain now of COVID-19, not something on a permanent basis. And last by no means least, when they do all of this, they need to keep the banks engaged. I think banks are going to really struggle, and it'd be interesting to get any Q&A from bankers in terms of their perspective here. But I think they're going to struggle on a number of fronts. One, in terms of their existing arrangements, in terms of their portfolios. Two, the interaction and the time that they will need to be spending with the ECAs on the existing transactions and working through that. And three, making sure that their guarantees are robust, enabling them to do new business going forward. So hopefully that gives you a viewpoint in terms of how bad it is, the storm, and how the impact is for the banks and the ECAs, and where I think collaboration needs to be needed going forward. And with that, I'm going to pass on to Angelica Adamski, who's the board director of the Swedish African Chamber. Angelica, do you want to pick up on some of the points here?
Yes, thank you, Gabby, and thanks for a very good explanation what's going on. It's no question that the situation is very difficult at present. But we will also come out of this lockdown, and it's a question of preparing and seeing what we can do in order to see that the trade patterns will continue, because trade has existed forever and it will most probably go on also after COVID-19. To me, the trade patterns will change, and it's very important that we as exporters and as industries continue then to adjust to the new trade patterns. Gabby touched upon that the liquidity will go out of the market, which also in turn leads to that all credit risks, not only the political ones that Robert was touching upon, but also the commercial credit risks are going to go up. That means that the banks will not be able to meet these demands, and we've got a bigger requirements for the ECA's coverages than we've ever have seen before. It's important to know, however, that we will have to deal with it. We will have to see, well, what can we do? I perfectly agree with Gabby. The ECAs would need to come together on a global basis. And if we boil it down one level, it's a question, what do we need from the ECAs? Well, we need continued, very high coverage in connection not only with the political risks, but also with the commercial risks. And now remember that we are trading in Africa, which in turn has got high risks in itself. I also see that it would be good to actually extend the coverage to short-term credits and to trade receivables. A lot of the ECAs around the globe, they already do this. But for the ones that are not doing this, this is an equally important thing to think about. But how can we cover short-term trade? I can also see that the coverage we would benefit from extending the coverage also to the sub-suppliers. We've got an interrupted chain of trade, and of the whole supply chain is interrupted. And it's essential actually to see, well, how can we also put the supply chain back to a functioning position? And not the least, well, what do we do actually with the 15% advance payment that is required today? Gabby, I fully agree with you. We will see 100% financing in the future. And the corporates, the companies, the exporters will not be able to carry all of these risks. So here it's either for the banking system with the aid of the ECAs to see what they can do about this. And this is urgent. This is not something that can wait. This is something that is very urgent and that needs to be addressed immediately. As I mentioned, actually, we've seen some of the ECAs around the globe coming in very swiftly. And from others, we're still waiting to hear what their future policy will be. But what really can we wish from the exporters' side? And here Antonella and Löw might agree with me. But I think also what would be very important. And the ECAs are already doing this as well, but we need to put even more emphasis on this. Could they also cover our working capital facilities? This is where we will go short. We will start to go short when trade is starting again, because our customers will not pay us, and we will in turn suffer to pay then our suppliers. So how can the ACAs and the banks support the working capital facilities?
Okay, I think I'll pick up on that point and just finish off and potentially answering a few of the questions that have come up on the screen. I think that the ECAs are very good in this form of crisis. You know, one has to bear in mind that they were set up in 1919, at the end of the First World War, at the end actually of the Spanish flu pandemic of 1918-1919, where they were there to provide that liquidity and to take the credit risk. So I think they have this in their DNA, and they will, in my opinion, fill the gap. We've already seen that with many, if not most, ECAs providing liquidity at the supplier side. The point I want to make is that there needs to be a coordinated approach for supporting the buyers. Because I think what's worse is not a liquidity crisis. What's worse is buyers not buying. And if there isn't a demand side that is quickly picked up, that I think is going to have a dramatic and negative effect right across the supply chain. I think that the ECAs need to act quickly and coordinated, and I'm hoping that that would be done through the OECD. But one can only direct them, one can't force them to do that. And I think national interest will play a part. So those countries that will be more proactive in helping existing borrowers to reschedule to avoid the defaults, I think, going to be in a stronger position to be favoured nation status for new projects going forward.
Absolutely, I fully second to that. I think also we need to see special programs from the ECAs or from the banks, whomever is supporting whom. The main thing is that it's happening. We would need to see that for innovation companies. We would need to see that to meet the changed trade pattern that we've got in the market, or we will see in the market as well when we come out from our lockdown. So there are lots of things to be done. And to me, it's a question of starting to work with this already now, here and now, for all of us. It's certainly extraordinary times that require extraordinary actions from extraordinary people.
Okay. I think we're done here, Jeff, unless I'm conscious of time.
Yeah, no, thanks to Gabby. Thanks, Gabby and Angelica. I think it's clear that the current situation's really impacting all walks of life. I think there's been quite a few questions submitted, which thank you to everyone. So as part of the final panel discussion, which Robert will lead shortly, we'll also go into some of those questions and bring some of the previous speakers back in to address those. Timing-wise, officially, we've got about 5 minutes left, but I think we could do another sort of 15 to 20, bearing in mind if people are still keen to stick with us. I see there's a lot of people still online, which is very encouraging. So yes, this does bring us to the final part of our conversation today, a panel discussion which Robert will lead, looking into some other areas and aspects, addressing the market, as well as the chance to talk through some of those questions that you've all submitted. So Robert, perhaps you could introduce your panel, we'll take it from there.
Thank you, Jeff. Hello again, everyone. First of all, thank you, Angelica, Gabby, and Zan's panel as well for those interesting sessions there. There are a number of questions still relevant to Zan and to Gabby, and maybe more to other panelists, so we may bring you back in later. But in the meantime, I'm going to introduce our next panel, which will field some initial questions from me as well as from the audience. We have Mandy Rapson, who is a sustainability practitioner. We have Vinod Madhavan, who is the group head of trade at Standard Bank. And we have Duarte Pedreira, my dear friend, head of trade finance at Crown Agents Bank, as well as the chair of the African Regional Committee at the International Trade and Forfeiting Association. Now, if you do have questions, just remind you, please put these into the Q&A box that you see at the bottom of your screen, rather than into the chat box. I'm only checking the Q&A box. This third panel is really focused on three key issues. That's value chains, free trade, and digitization. And I'm going to initially ask one of the three panelists here some of these questions. Mandy, I'm keen to bring you in from a sustainability perspective to talk about value chains. We've had a number of questions come in, which I think quite interesting for you. We had one from Jesus Fernandez Munoz, says one of the topics that we hear right now is the relocalization of value chains, particularly for agribusiness. How do you expect this to affect Africa? And then right before we even got online earlier, we had an extra keen individual, Clenzi Apavu, asking about, is there an over-dependence on China? Has the over-dependence on China proven to the world that this dependence has gone too many steps too far, that a small sanitary issue has been able to disrupt the whole world economy? Is it not time for continental Africa to think and seek cooperation on a South-South basis and target countries such as Australia, India, Indonesia, Australia, and Brazil? So, lots of to think about here. From your perspective, where would you like to come in?
I think I'll chat a little bit about the relocalization of value chains, and maybe some of the other guys would like to jump in on the China question. But I just want to initially start off by, speaking about adding value in African economies, and maybe a little bit slightly different perspective, more on the ground, kind of nitty-gritty that I'll be speaking about. So the spread of the pandemic has brought to the fore the desperate need for business leaders to recognize the crucial interdependencies between business, the environment, social, and governance. And it is very evident that now more than ever, that the success of business trading cross borders is dependent hugely on the quality of the social fabric in which we operate. Businesses need to strengthen the social immune system for their own good and their own long-term sustainability. And what this means is reducing extreme poverty and inequality, such that societies can withstand crises like this. So speaking about relocalization, there's definitely a big need to bring it in local and strengthen locally. The crisis has created a unique and monstrous impact. But as we continue to push the boundaries of society and the environment, more frequent crises like this are going to be expected to occur. South Africa has just come through one of the worst recorded droughts. Australia's had some severe environmental impacts. Many countries are facing that, and many of them are facing the impact that it's had on the economy. And I just wanted to look a little bit about some of the realities here in South Africa in terms of informal markets. The informal sector in South Africa contributes to about 2.5 million workers, whether it's through jobs, incomes, livelihoods. And this sector also provides 850,000 people in employment, which is, I think, double the amount that the mining sector employs directly. So it's huge. And the reality of states' inability to understand local informal sectors has become glaringly obvious in this time, as people are literally starving. And yet there's 850,000 people that are in the informal sector. Riots have started, people are hungry. So you might be wondering, from a trade perspective, what does this have to do with my business? We don't operate at that scale. We don't engage in such small informal businesses. But if we are to support this social immune system, even if it's for the benefit of our own business interests, we need to really start looking at engaging and solving for the local. And I know there's a lot of talk about digital, and I'm going to touch on that very briefly, and then I'll move, and then other guys can jump in. But how does digital come into this? I'll share some case studies that I've looked at recently. I'll share it on LinkedIn, but for the interest of time, 2 case studies that come to mind. One is rapidly solving an issue around food supply, looking at them and asking questions, what digital solutions helped them? And the lady refers to her sticky notes on her back wall. So it's very rudimentary and archaic, but 4 weeks into it, now they're starting to look at what digital solutions exist that can help support that. Yet the second example is around an ecosystem that already exists and that will support informal markets. And all that remains is a catalyst. And the catalyst isn't necessarily the digital. The catalyst is often an individual or an organization or leadership team in a corporate institution. And so what these two examples highlight is that the importance of digitalization is undeniable, but the embeddedness of it is complex. And the havoc that COVID-19 has created on the value chain and the responsiveness that we've seen in rapid digital onboarding has been fascinating. I think we've all been enjoying seeing, I mean, this conference speaks of itself. So you know, it's quite exciting to see that, but we must be careful that we don't sit back and be quite proud of ourselves for thinking that, you know, look at us, we're innovating, because the incorporation of digital is a tricky one. We have to be very careful that in the process, we don't deepen the chasm that already exists between the haves and the have-nots. And even now in this process, the obvious, glaringly obvious divide between the formal and the informal is huge. And those who are just in the informal sector have made it, have so much support that South Africa has made available to them, but yet tons of people are sitting starving because they just haven't made it into that. And so the question is, how do we engage in this without making the chasm even bigger? And is it really that we're sitting with new problems through the COVID, or are we really simply placing a greater sense of urgency in trying to reduce this chasm?
Thank you, Mandy. That's great. I mean, there's so much to talk about when we talk about the value chain, and potentially there's something we can pick up again later. But I wanted to steer over to Duarte Pedreira from Crown Agents Bank as well. Duarte, there's a couple of questions that have come in about one of your favorite pet topics. One from Jason Muscat is, what does COVID-19, the outbreak or lockdown, mean for the proposed mid-year start of the AfCFTA? Will it be pushed out? And does free trade present a risk to the fiscus of African countries at a time when revenue is already under huge pressure? Duarte, this was supposed to bring 1.3 billion people together in 54 African countries and create the world's largest free trade union. What is going to happen, and is this lockdown worth it? Over to you, sir.
Well, I've got a very particular opinion. I'll try to be as politically correct as possible. Just before I answer your question, and very quickly, Robert, I have the absolute pleasure of being the chair of the Africa Regional Committee for the Global Trade Finance Industry Body, the ITFA. And I've also now proudly passed that on to my dearest friends at Afreximbank. Look, I think we were all in a very keen mode of excitement about Africa. You know, attending conferences last year across the board, the topics would all go around the opportunities of the free trade agreement. But it's not just that. We were finally seeing economic diversification in Africa, solid investment in infrastructure, the opening of trade borders, talks about common currencies in parts of the continent. And I think for me, the most encouraging signs were coming from seeing Africa moving on from just being a bed for commodities, but actually moving towards value-added industries. I mean, I don't need to remind anyone on this seminar that at the moment we proudly have mobile phones being produced in Africa, in different parts of Africa. We've got laptops, energy meters, and so on and so forth. Now, of course, COVID-19 has thrown a spanner in the works, and as far as I see it, and apologies for stating the obvious, things can go two ways, positive or negative. If we look at the negative effects, I mean, you've mentioned this, Robert. The two-thirds of Africa are in effective lockdown, and I think we've got over 15 additional countries in partial lockdown. Now think about this. The informal sector, whether we like it or not, is still very much the catalyst of African economies. So by having people staying at home, the informal sector will suffer. How are we supposed to expect people who've always bought from other people on the streets to all of a sudden move into the formal trade? It's not going to happen. At the same time, of course, we all know that Africa is heavily dependent on imports and exports, and now we've got many of the African airports for sure, and also quite a few of the ports closed down. If that wasn't enough, then we saw a slump in commodity prices, with oil price going down spectacularly, and the repercussions that will have, which you quite rightly alluded to, in terms of countries like Angola, Nigeria, and so on and so forth. Now, you know, I've always touched on this, and now that we're living yet another crisis, overdue or not, but it's a real thing. And it's only just starting. I will want to see what the banks and the financiers' reaction is going to be. Are we all going to run for the hills as we seem to be doing at the moment, where, of course, we're very scared about the new wave of stress testing and shoring up capital and so on and so forth, and everybody's kind of putting new business on hold? Or will banks be there to finance the new wave? We've heard from Gabby that perhaps CCAs need to take a more proactive stance. So that's the doom and gloom, right? So let's see the flip side of the coin. Remember, Africa, and I consider myself, I always say this, half African, not by birth, but by heart. We are resilient. We are resilient. You know, we had Ebola, we had the whole countries being shut down, locked down, whilst the rest of the world happily saw the next soap opera on TV. Liberia, Sierra Leone, and parts of the DRC were in effective lockdown because of a disease that, don't get me wrong, doesn't kill 3 to 7% or 10% of those that it affects. It kills 90%. Okay, and Africa has overcome that and has taught a lesson to the rest of the world. Simultaneously, I mean, Africa is a hotbed for technology, and particularly mobile technology, because of the lack of infrastructure before. Africa leapt straight through into the mobile technology. And, you know, I remember going to Kenya last year and they had 5G before 5G was in the UK. With that, I also want to say that I was very, very positively impressed by our entire client base for Crown Agents Bank, moving into business continuity plans and remote working and so on and so forth in record times. Now, is there a new way of working fueled by this resilience, appetite for technology, business continuity planning, and so on and so forth? And will Africa be able to teach the rest of the world a lesson? Let's look, for example, at mobile money. You know, people are now taking on the concept of mobile money more and more. So that is something that Africans are definitely not alien to. Finally, just to touch on China, I think China is a great opportunity. Why? Because China is getting back on its feet before everybody else does. And guess what? China is one of the biggest investors in Africa, biggest lenders to Africa, and biggest trading partner with Africa. So that can absolutely be a positive. So I'll leave you with this thought. So I'll answer your question with another question. which is who is going to win? What is going to win here? Is it the negativity of all these negative factors eventually bringing such a beautiful initiative such as the Continental Free Trade Agreement to a halt or even cancellation, and taking Africa decades back in terms of the development that they've built over the last few years? Or, and I really want to finish on this positive tone, will the new wave and new generation led by people like Paul Kagame and so on and so forth be able to take the continent forward based on all the positive topics that I mentioned, and rapidly refocusing to go back into sustainable economic growth and development, regardless of what's going to happen with the rest of the world?
Thank you, Duarte. Brilliant. I'm going to take your question on who's going to win. I'm going to kick it over straight over to Vinod and ask Vinod, is digitization going to work, Vinod? They've got a question here earlier, and, Duarte, you already mentioned crypto money, etc. Is it not the right time post-COVID-19 to focus on the use of crypto money or mobile money like M-Pesa used in Kenya and a few other countries successfully to reduce dependence on banks and facilitate trade among peers? Now, looking at some of the successes that Kenya have had with cryptocurrencies and the essential digitization across trade finance platforms essentially the past few months, is there an opportunity here? And, back to Duarte's question, could this be a winner out of this entire crisis?
Thanks, Robert, and thanks, Duarte, for sitting me up there. The way I would like to think of this is, before I get into cryptocurrencies and how the adoption of cryptocurrencies would either help or not help, what is at the core the gaps that the current situation has highlighted? And in my mind, it's like basically two constituencies, for lack of better words. One being the corporates as clients, and the second being the people, be it the corporate side or be it at, let's say, in my team and in operations. The corporates are going through, it has already been covered. So, in my mind, it's basically a financing requirement because of the extension of cash conversion cycles. And the second thing is in terms of risk mitigation, either operational risk mitigation or shall I say, country risk comes to mind due to everything that we have spoken about. And how can digitization help corporates specifically now, and let's say on a more broader base? And secondly, in terms of people, I think everybody's moved into BCP. We have covered that in the past year. Our corporate clients have activated work from homes / BCP, and so have banks. I'm talking about the banking industry. So what are the immediate shall I say, issues being faced? The fact that DHL as a courier company does not support markets such as, let's say, Mauritius. Some of us, not me, but some of us have chosen to, shall I say, hub operations into low-cost locations. Let's say India, let's say Philippines. How do actually documents move there? And a lot of people have solutions to that, but I think all of us would admit that we have got caught out. This, in my mind, is actually the biggest impetus, both from a people and corporates point of view towards adoption of digitization. However, I have a request to all players, and certainly my shall I say, colleagues and competitors in the banking industry, and maybe even the corporate clients, to actually, in my opinion, there's almost a moral obligation now that we need to engage the regulators and engage the governments in the various markets to actually say, how can we actually use this? I mean, a colleague of mine used a nice phrase, there's a crisis, we should not let it go to waste. This is the time when we need to go to regulators and actually say, here is an idea, and by the way, this is not my idea, this has been put out by ICC in a memo to the regulators last week. I think it was on 4th of April, or maybe 3rd of April, where this basically said a simple thing. The governments can come and say they temporarily remove the requirement for any physical documentation. In Nigeria, as we stand now, it is still a requirement. The Evidence Act says that unless you have wet ink, you can't actually operate. Why? I mean, why is the government not coming in now? Lockdown has proven that there is a mechanism to actually respond to requirements without having to follow a process. Why doesn't the government come in and say all physical requirements are temporarily waived? Of course, each of the institutions and each of the banks need to now respond from a legal point of view, but at least we will actually respond to that. I will, and my belief is that I think this will be one clear takeaway. I think it has been covered in the past in this conversation itself, that I think we're not, the industry, the corporates, and maybe even the retail customers are not going to let this go to waste, and we will see traction. There is a story saying that it was SARS that triggered the global growth of Alibaba and Alipay. Maybe COVID-19 and SARS-CoV-2 will do the same for us here. Let me kind of quickly touch upon the China question, which Duarte kind of touched upon. I feel that is right. This is not about kind of creating new demons or new enemies. There's enough conspiracy theorists out there. Let them actually kind of go ahead with that. It is time for a rational mind, which basically means we need to do what is appropriate for us. We need to go in with our eyes wide open. And if China is back to business, then we need to leverage the opportunity. So I'll pause there, and I think it's back to you, Robert, in terms of maybe taking other questions.
Brilliant. Thank you very much, Vinod. I'm aware of time as well, and I wanted to address a question we had earlier, and I was hoping to bring back Zan Meyer, who I see is still online from Nedbank. There you are, Zan. Quick question to you. This is a question from Lanle Olinini. Hey, Jeff, question for Zan. From a bank's perspective, how are they reacting to trade transactions? i.e., are they hunkering down and only servicing current clients, or are they taking a more tactical approach at looking for investments in selected sectors? Over to you.
Landry, thanks for the question. It's certainly not a difficult one to answer. I think it's a combination though. What we're doing at the moment, especially here at Nedbank, is we are working with our current clients. We give them priority in terms of this difficult time. We are helping where we can in terms of restructuring debt. We're helping where we can in terms of extra liquidity. So I think where we are at this point in time is to focus our energy on an existing client base. However, we do look at new opportunities. The constraint that we're having to deal with in the rest of Africa, and Gabby mentioned it, is $45 billion leaving emerging markets in the last 3 weeks. So in terms of cost of funding, I think everybody knows that has gone up unprecedentedly. So I think where we are at the moment is the opportunities we're looking for is closer to home. It's probably in local currency rather than foreign currency. But having said that, we have a couple of deals in the pipeline, tightly secured deals with collateralization around it, making sure we got the commodity or the underlying value of the commodity as collateral. And I think those trade deals will always still happen. They secure, they make sense, and obviously it's foreign currency earnings. So from that perspective, yes, we're hunkering down, but purely because we're looking after our existing client base with utmost care.
Thank you very much, Zan. I believe we are coming to the end of our time limit here. So I'd like to first of all thank everyone who has posed questions to the panelists. There are quite a few unanswered ones, and you can always contact GTR if you want some of these questions to be redirected to any of the panelists or to myself. I saw questions earlier about the presentation that I did earlier. You can contact GTR or indeed my company, Africa, to get a copy of that slide deck. There were a number of questions about cybersecurity and civil unrest as well, where if you go to that page I showed you earlier, there will be some content on there later this week regarding those questions. In the meantime, I would like to thank everyone for their attention today. I'd like to thank all the panelists for their excellent inputs and expertise opinions. I'd like to thank GTR very much for co-hosting this brilliant webinar. And I wish you all a wonderful rest of your day and wish you to keep safe. And I'm going to hand over back to Jeff Ander from GTR. Thank you.
Thanks, Robert. Echoing Robert with the thanks to all the speakers, and indeed everyone's who's joined to participate, posed so many questions. Most of I think all of the speakers' details via LinkedIn are on our website as well. So there's another opportunity for people to get in touch, carry on this engagement. We've covered a wide range of issues and really value the chance to connect with the GTR community in these uncertain times, and hope that you do too. We're going to be making this webinar available to view via the GTR website later today for those who haven't been able to make it, or indeed for anyone who wishes to watch again, with several other webinars planned over the coming weeks for various markets and addressing different topics. So do keep posted on the GTR website with details of that and the latest news, features and the regular stuff that you know from the website. Look out for further announcements. We'll be letting you know about the plans, and if you do have any questions, do not hesitate to get in touch with the GTR team in these somewhat isolated times, as we know. But until then, take care and stay safe, everyone.